Alright traders, I am back again with another video, and in this video we want to take a look at US dollar CAD trade setup that we discussed in trade that we let members know about in our Sunday session. So what happens here, guys, is every week we have our Forex session, at least to start the week off with the Sunday open. And during that time, these sessions are very important because you get the opportunity to see the markets and plan for the trade setups that are possibly going to happen this week. And there was one that we really talked about and we liked, and we talked about it on our webinar, and it was this US dollar CAD. So what I'm going to do is I'm going to show you where we were looking at the trade, and then I'm going to show you the trade where inside the session what I was talking about. Okay, so I'll let you see what we were talking about inside that session, but here's the US dollar CAD where we were currently talking about it at that time. Well, easy trade setup again was because it was just a basic Ichimoku trade where the market broke some levels. So it broke through this consolidated level here. It was pretty much this range level and just broke through. And then we look for the market to pull back. You had a TK crossover that was bearish. So when we saw the market pull back up to Kijinsen, we saw there was a lot of resistance here for the market to be able to move back to the downside. Now you have a strong trend to the upside, and I don't just think that the market violates these trends like in just one move, especially a strong trend like that. So I'm not saying that that's happened yet, but when you look at what happened here, we looked at this market moving up to Kijinsen here, and you also had strength with the cloud above us too. Now when we looked at the trade, I believe we had the crossover already. So we had a bearish crossover and we had a dark future. All right, so our future was dark. Chiku span was below this price level here, which was good. Now Chiku span had some support running into this cloud here, but what we talked about was, since this candle, we wanted to see this candle close. And then we also used the Williams percent R, which is set to the 5 period. I wanted to see that Williams percent R break that -20 level. With a break below that -20, I figured we would get the break below this candle also. So we put our sell stop at this level with a stop loss above this point. Okay, and then like to have a 2 to 3% stop loss level. And I don't want you to learn to base your stop loss on your what you can afford. Now that's not what I'm saying. Understand what I'm saying here. A stop loss has to be technical. All right, so first you find the technical stop loss, and then you see if you can afford it. Basically the way you afford it is, if it's too much for you to take that trade with one standard lot, then maybe you have to break it down to, you know, less than a standard lot. All right, so maybe you have to go down to 5 minis or whatever. All right, so you want to be able to make that still be within your money management. So you don't ever take a trade and say, well, look, I can use a standard lot here, take this standard lot trade, and my stop loss will be right here. You can't base your stop loss off of right here and I could afford right here. You got to base your stop loss off of a resistance level or a support level, a technical level, something like that. So let's just say this was the level. If you couldn't afford to take the trade here with a stop loss here using one standard lot, then maybe you use less lots to make it affordable within that 3% you know, loss of capital here. So this would be 3% capital loss. But if you use a standard lot, then maybe it's more than that. So maybe if you're using 2 standard lots, you say I could use 2 standard lots and still be within range. But then some people can't even use a standard lot and be within that range. It all depends on your capital. So you want your stop loss to be technical, and then make sure your money management and your capital can fit inside of the stop loss. If that all fits, then you go with the trade. If that can't fit and you can't work it out based off of your lot sizes, then you don't take that trade at all. Okay, so what happened here was, we were looking at this, we wanted to see the price break back below, so we put a sell stop here, want to see the market break back below. The outcome, break, break, and then we were good. This is today. All right, so pretty good move there, based off of what we were looking at. That's 149 pip move on that trade. So it's not a trade that I wait to see if it's happening and say, this is what I'm looking at, guys. The trade already happened. Here's an opportunity for you. I plan this. Every trade I look at and plan is beforehand. I already know where I want to trade. All right. I'm not, what I'm doing here is like, let me show you again. When price is here, I don't have a trade. I don't have a trade right here. And then I'm looking at the market and trying to see which way the market is, and I look at the market structure. I use the fractals for a lot of structure. My next opportunity, I'm looking at levels to see where my trade level, where my opportunity is. It could be this cloud, because maybe the market comes up, finds resistance here. All right, it could be this trend line. Maybe the market comes up, finds resistance at that trend line. It could be this 100 period moving average, this blue line. Maybe the market comes up, finds resistance at that blue line, at that 100 period moving average. But then it could be Kijinsen. So that's what we planned, for the market to move back up to Kijinsen and then drop to the downside. Now we're looking at all levels, but we plan our trade based off of these levels. When the market got to this level, I'm looking to short it. So as the market moved higher, I knew that wasn't my level. Then I could have thought this was my level, so I could start planning here for a short opportunity. But then the market doesn't give it to me, because my short opportunity would have been below that candle. All right, because I want the market to come down to me. All right, and I want to see a break below -20. So I wouldn't have saw that here. But then the market moves up to this Kijinsen and this cloud here. And then at that point, it gives me an indecision candle. Loving it, right? So then I put my sell stop there, a little bit below. And then I say, put my stop loss based off of what I've told you. So I pretty much I like to use my next fractal levels, because if we talk about fractals, now that's a big stop loss. So then I'll go to, if I don't want to do it that way, I'll go to my support and resistance levels. All right, so I'll use those levels, or else I'll go to the Kijinsen and use the Kijinsen level. So you got many ways you could use stop losses. There's different types of stop losses you could, levels you could use. You could use these fractal levels, bottom to top fractal levels. You could use the Kijinsen, and so forth. So then when we watch the market go, there we go. So let me show you what we talked about. Let's see that everything we talked about during the session, and see that I plan to trade well before this move here. We already kind of looked at that, and we're hoping for that to happen, and planning it based off of market structure, price action, support and resistance. All right, and then looking at Williams %R, and then a little bit of divergence. All those things help to make us feel like we have a stronger setup, give us more higher probability trades. So let me show you what we were talking about. And guys, at this point, we have these webinar sessions every Sunday. And then sometime during the week, if there's a lot going on that there's more opportunities, I'll have another session. But it's so important at these sessions, because we go through every single currency, currency we go through almost. So here's the pairs that we go through for Forex, all of these. In that one session, we go through all of these. All right, and we look at them all, and we see if there's any trade setups for any of these. All right, and at this point, we found this trade setup, and we had like three during this session, because you're not always going to have a setup. So some of them you're waiting for the market to get to those levels. So some of them we talk about and say, okay, we're not ready until the market gets to this point. So every single pair, we're looking at where we want to see the market get to. So if we're looking at another pair like Aussie CAD here, we know we don't have any trades at this point. So we're waiting for the market to get to a level where we can trade that market. and we're trying to short that market. So when the market dropped here, we know that when the market was down here, we already knew where our level was to trade this short. So you could see down here where the market was. So here's how we do our trades. As this market is dropping, if I'm not going to trade this market at a support level, then I'm just waiting to see if I'm going to follow that trend pretty much. And at that point, I tell everyone there's no trade. There's no trade. There's no trade. There's no trade opportunity. Now, there is a counter trend trade opportunity, and we discussed that. But for the bigger trade, we're waiting for the market to come to our levels. Now, it came to one of our levels, but it didn't give us a trade. And then it kept moving. Came to another one of our levels, and this is where we almost got into a losing trade because we got in quickly. And the market fooled us a little bit there. So if we would have waited for our zone, as you can see, then the market came back to the zone. At this point, if some people took the trade, they lose confidence and then they don't take the real trade when we get into our zone because you got in too early. The market didn't pull all the way back to our point. It looked like we were good. You lose that trade. Then you fail to get into the good trade when it does happen. And then you can see the market indecision candle again. You could see the level where we were looking at taking the trade. It's already there. And then what happens? The market drops. All right, now you got a bullish crossover right here, TK crossover. At this point, once we already took the trade, we were also thinking about the 1 2 3 formation, the 1 2 3 reversal pattern. But you can see what the market did here. It just dropped down to a good level and made good profit for us. So that's what we looked at. That's what we look at for all of our trades. And you can see now we're talking about there's no trade opportunity because we're not at any of our levels. So when we trade, we need a level, a signal, and a trigger. So we need LST to trade. So let me take you back, look at that last trade, US dollar CAD. And then guys, I want you to just think about becoming a member with us. Currently I'm offering that lifetime membership, and I'm going to cancel that come Sunday. But if you come to become a member, you could attend all of our webinar sessions. You could watch the archive sessions. You can have access to all of our courses and forum and chat room and so forth. All right, you can make this the price of this membership. You can make that back pretty much in one trade. All right, guys. So hopefully this helps you out. Have a look at what we're getting ready to look at here. Show you the US dollar CAD trade and how we were talking about it that day during our webinar session. All right, guys, have a great one. I'll see you after this. Well, I'm not going to see you after that. I'm going to let that play, then I'm going to be done with it. So have a great one. Watch the rest of this video and you'll see what we were talking about. All right, so here's a good opportunity. US dollar CAD. So US dollar CAD was on a trend to the upside. And I don't think you break a trend like this that quick or that easy. So even if we get a trade here, what I'm looking at is we broke this trend line and we broke this bear fractal. So the market dropped to the downside. It pulled back up to the fractal zone. And it looks like it's giving us a chance to short with a TK crossover that's bearish. So I'm looking at this as an opportunity to short this market right here with a short sale right there. Hold on one second. Oh, I don't know what Owana stands for. Do you need a rejection at Kijun or Tinkinson to take a bounce trade? Well, what bounce are you taking? Are you taking a Kijun bounce or a Tinkinson bounce? But if you're trading one of those, you need to see the bounce happen. Right? You can't just, I had a guy tell me, I told this before, And you would tell me the same thing with any bounce, but he would do like this. He would say, I don't trade the keys and bounce because they don't work. I said, what you mean they don't work? Well, every time I put my entry, so here's what he would do. Let me show you what he did. We're looking for a bounce here, right? Because the market's going to come up to Keynesian, and then we're going to short it. Well, he says, okay, I'm going to get a Keynesian bounce here. Put my entry in right there and let the market go. Keynesian bounce. He should be in the trade now. But what happens, sometime it doesn't stop here. It keeps going. You never put your entry there like that because it didn't bounce there yet. You need to see the bounce. That's why we wait for a signal, because this is the level, then the signal and trigger. Now I would say we're getting a signal and trigger where we could put an entry at this, below this indecision candle, because this indecision candle in the end could end up being also an evening star. All right. So what I would do, you got a whole day for this candle. This candle might end up not being what it's showing you now. And it's important to see that, because if you're going to go short here, what if tomorrow this candle's up here? You can't go short just based off of the level. That's why you need the signal and the trigger, guys. You cannot go short just off of the level. So, okay, so you're in that trade already, but it may work for you, okay? It may work. So don't worry about it. But don't let this trade turn you into a bigger loser. So if you're going to say, and I don't mean a loser like that, I mean, don't let it turn into a bigger loss than you want it to be. So what I'm saying is, like, if you shorted this based off of a Keynesian bounce that didn't happen yet, because it hasn't shown us a bounce yet, don't let this turn into, well, I'm going to give it to here, or I'm going to give it to here. By then, you know this isn't bouncing. To me, it's not bouncing if it doesn't bounce right here. All right. Because when I get in a trade, I want it to work immediately. I don't want it to wait 4 and 5 days. Now, some of them do, but those are the ones you have to trust your analysis. I think DQ's in here. So DQ, right? Trust your analysis, right? He lost a trade because he didn't lose a trade. I think he made 500 or 200 when he could have made 1,500 because he didn't trust his analysis. Got to trust your analysis. And the best way to trust your analysis, right? Another thing that I did that helped me to get better was these trades that I'm talking about. Sometimes I would never take the trade. I would just draw it all out on paper, not on paper, on the chart here. So I would say, okay, I'm going to take this entry here, and I would mark it and say, this is where I'm going to enter, and I'm going to take profit here, blah, blah, blah. And then I would watch the market do what I thought. And then I would watch the market again do what I thought. And then again, the market do what I thought. And I was like, wow, this is really good. It's working. That built my confidence. All right. So this could work for us. And I'm going to be sending this out as a trade setup, quite possibly. Now, I don't just send out setups based off of, for me, the setup has to be high probability trade setup for me to send it out to you. So I need to see this market a little more. All right. And if I send something out about this, it'll be what I think could happen and what we need to look for a short here.